The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. We got the S&P down 1 point. We have the Russell down 6. Nasdaq's in positive territory right now by about 3 points. Dow is down 7. Oil is currently up, 0.35, so 35 cents on oil. Natural gas up, a little over 0.5%. And corn is currently up just a mere $1.50. Soybeans down $2.75, sort of quiet in the ags today. Euro dollar is just down 7 pips so far. Aussie dollar down 140 pips, so pretty large move. It didn't really do anything last night after the interest rate announcements. That was no big surprise, but given enough time, it finally decided to move. Pound dollar down 19 pips. Dollar CAD up 72. Dollar franc up 11. Euro yen up 79. Pound yen up 91. Dollar yen up 58. Gold is currently down $15, over 1% on the day. Silver down 0.331 on the day. And then copper is up 1%. So with all that being said, let's check out right over here. Okay. Let's go in and look at a few things in the diagnostic binary analyzer, see what there is that we might be able to take advantage of on any of these metal markets here that are coming up. They don't have a lot of time. Is there any premium collection? Looks like we might have an opportunity in the 1398 binary right here. You could sell this one. You could also buy the 1395 as a choice for premium collection as well. And so looking at this trade, we could go ahead, let's see, let me do that one and this one right here. Put these together, okay? And then we'll actually have a premium collection range-bound trade. So right there, okay? And now that gives you a trade. Now this trade does take longer than you normally want on premium collection. You do have about 20 minutes, but a lot of times on the metals, you're going to have some time to have that. Now, the nice thing about this premium collection, it's a butterfly trade, okay? So the market has to stay inside the range. And if it stays inside that range, if it stays above greater than 1395 and at or below 1398, then you'll basically bring in $50 on the trade. So, because we sold it for, $77.50, we bought it for, $29, and we sold it for $29, we bought it for $77.50. So that gives us about a $50 profit on the trade. And so yesterday I talked about, this premium collection directional. Today I'm talking about going into a butterfly a little bit more for you. And let's see here. So if I bring up a calculator, show you this trade specifically and how it works. And let's see, let's pull it up over here. So if I go on, and I'm like, all right, well, what'd I sell it for? Okay, I sold it for $29, right? And then, so that's how much I actually will make on that trade. And then what I buy the other one for? Well, I bought it for $77.50, which means I'll make $22.50. So plus 22.50. That gives me a trade of $51.50 and to be able to profit on the trade. So that would be, pretty simple trade. And again, range bound has to stay range bound in order for us to be able to, capture that profit on that trade. Right there. And so let me see what else we can do with this. And so once you have that trade on now, what else can you consider? Well, one, we have 20 minutes. Okay? So what could happen in that 20 minutes? Well, gold could stay flat. If it stays flat, okay, then I'm able to profit on the trade. And if it goes up to 1398, and I know I sort of repeat this stuff, but it's like, people sometimes have a hard time with it. So I want to make sure you do have it. If it goes up to, 1398, then I'll be okay. If it goes down to 1395, I'll be okay. I want to stay inside that area. And let's see, I'll pull up a gold chart for you. We'll look at it actually on the chart. And right over here, 1 second. I actually like this. This has a lot of good things about it. So here we go. Okay. And let's see here. We got 1398 right there. Okay. And so you can see we've sort of been in this range since, what, 10, 11 a.m. Eastern time? So we've been really in this range the entire time. And I mean, it's a tight range for gold. I mean, it's only a few points. So it's not necessarily a very wide range. But, I mean, it is definitely, you can definitely see how gold has been range bound in that area. You do have two hold numbers. And it, now, if, let's say it was to go to one of the strikes, okay, and you wanted to, say, get out of the trade, then you could get out, let's say, if it hit 1395, and you'd have a very, very small loss on the trade. Because what would happen is you'd be making, probably about $15 on the one that you sold. They'd probably be up 15 if you're, you could make a maximum of 25. You're probably up about $15 on the trade. On the one that you bought, then you could, potentially go in and you'll probably lose about 20, 25 bucks. So you may lose like $10 on the trade if it stays, if you decide to get out right when it hits that support or resistance area on the trade. And the other choice, okay, is I could let it just go to expiration and what happens, happens. Why would I consider that? Why would that be an option? Well, if it could hit it, go out of it, come back inside of it, and I really don't care where it goes in the next 20 minutes, so long as ideally it ends in between 1395 and 1398. And you can think about this sort of like an iron condor, okay? And I mean, it's really very, very similar in the sense of a true iron condor, okay, has, a range where you can make money in that range, and all the strikes are equally apart. So if I have 1398 to 1395, then that'd sort of be like saying, okay, well, 1398, and if I added, this isn't completely applicable, but just to give you the idea, like this would be my, my max loss zone. And then 1395 went down to 1392, that sort of be like my max loss zone. Now the reality is in binaries, if you're on either side, you're going to have max loss, okay? But it's a 1-to-1 risk-reward ratio on the trade. And so it's a pretty sweet trade to be able to do it, and not extremely challenging either. So because you just hop in there, you pull them up on the scanner, and throw the trade on. And I mean, I literally, like you said, like right there, I pulled it up on the radio with you, and I put it on there. And then simply, put the trades in the scanner. So how do I do this on the scanner? How does that actually work? Okay? And I go right up here to the top of the screen. I put in 70 to 90 on the binary spread scanner. I click both. And then I'll choose 0 to 30 minutes. I'll scroll down and look at the market that I want to try to find a trade on. And then if there's one available, that's the one I'll take. And I'm ideally looking for one with about a 1-to-1 risk-reward ratio. So, but, it's very simple, and as you get used to it, I mean, demo trade it definitely to begin with as you're learning it. And it'll make life really easy for you. And it's really cool, because I used to do these trades over the course of a month. I'd go in, and on the Russell 2000, I would go in and do iron condors. But I'd actually do an iron albatross, because it means it's really, 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 really wide. And so when I was doing that trade, I would be waiting 20 to 30 days for that premium collection to expire. And I'd have a take profit order in there, and all those things that I could do. But if I didn't put the trade on, then I lost out. Like if I missed, like if I was busy that day, if I forgot, if the market moved a lot, that was a losing month. And by the way, when I did these on Russell 2000, I did them really far out. I was trying to collect about, $50 per $1,000. Okay? But my risk was enormous. You're talking like easily a few $100 risk to make $50 on $1,000. And now the probability was huge. Only a couple losses in years. But one loss wipes out months of gains. And, and it takes months to get it back, right? Well, on this, we're talking about basically an iron condor in the sense of you're making 5%. Okay? So let's say you did one of these per $1,000 in your account. But you're only risking 50 to make 50. So if you lose one more can make it back. I don't know if it gets any better than that. And not only can you do this, but you can do this multiple times a day. There are 21 expirations on Nadex. Okay? And there are 20 markets. There's 21 times a day that there are binaries expiring. And you can go in, it's like 7 p.m., 11 p.m., like 3 a.m., 5 a.m., 6 a.m., 7 a.m., like 8, 9, 10, 11, 12, 1, 2, 3, 4, 4:15. I think there's like a 1:15, 1:25, 1:30, 2:30 in there for some of the commodities. So really, it doesn't matter. It doesn't really matter what your schedule is. Okay? Whatever your schedule is, it can work for you. So when you do this trade, just make sure that you line up a time that's going to be consistent for you. Now, what I have found is the daily expirations will often give you a little bit better, premium sometimes. So it's nice to sort of focus on those daily expiration time frames. So if you're doing Forex, you might be focusing on 7 o'clock or 11 o'clock or 3 a.m. So just putting those pieces together, then you can do that. And I'm trying to see how to put this on here. We can find any other trades. Maybe we'll find some lunchtime trades coming up. We do the same thing. We can do these on currencies. Okay? And so we'll hit reset filters over here. We'll just make sure we got everything exactly where we want it. And let me check. And let me see here. And let's see, I got the Aussie, got the pound. Let's see, there's nothing coming up right now for trades that will basically fill what we're looking for, but that's because of the expiration. So what we're going to do is we're just going to bring the expiration out to 2 hours. And now watch what happens. Right there, we can actually see a variety of potential direction. Now, I do directional unless I have a reason to do a butterfly like what we just had. So, all right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. So we got that one tick-tocking away for us there. And it's definitely decreasing in value in our favor as gold remains in the range. So, again, just sort of, trying to show you a butterfly right here. And, just on a sort of a quiet gold market. Now, of course, it was very volatile, as you can tell this morning. When gold ran on down, 1388, flew back up. I even had a short bias on gold, but after that run back up, I'm like, how do I rescue this position? And I didn't have a big one. It was only $25 a contract or whatever. And so I was like, I can hop out of that thing, hop into this one. And, if it stays in the range, then I make money. If it doesn't, who knows what happens. But, I did not see a high probability of that thing closing below 1385. So when I don't see that, I don't need to necessarily wait until expiration to let the thing go to a maximum loss. And now one thing you can do on these, one thing that can be wise to do, is you can even take profit as they're oscillating. Okay? So, like right here, let's look at this. And we can actually get out of this trade at 94 right now. And so that's pretty sweet. And then we got another one coming up And if that one keeps going right there, then we can flip that around to the other side. And this one we could take profit, if it drops back down. So as this starts oscillating, especially as there's only 4, 5, 10 minutes, you can take profit if you want to on the trade. And especially because they can go crazy volatile. So we could go in on the one that we sold at 750, and now we can flip this around. So let me go ahead and show you what that looks like. So right here, I bought it, so now I want to sell it for 96. Okay, so change it to sell, and then hit place order. And now, the one that I sold for 29, I want to buy back, okay, for 5. So I can put place order. Now, this does obviously decrease my profit, but it will increase my probability of profitable trades. Because what will happen when I do this is I'll be able to go in and basically have trades that oscillate, go up and down, and maybe they break out at the very last second, but I'm able to get out at a take profit order, where someone else may be stuck in the trade waiting until expiration because they want that last $5 or $10. And so, hey, if I can collect 40 out of 50, if I can collect 80% of the potential profit on a trade, remove all risk, and free my capital to put on another trade, that's not a bad deal. Okay? So, just some things to think. There's a lot of different ways to do these trades. You could just leave them on. But there is something very nice about being done flat and out. So, I want to bring it just different ways to do this. And I used to do that as well whenever I did my iron condors on the Russell 2000. Okay? I would go in and I would literally put a take profit on the trade to buy them back. And I'd give up a piece of that profit with the simple, intention and a simple goal, whatever you want to call it. But I give a piece of that profit just to be out of the trade and remove the risk and to free up the capital. Because you never, and this is really true, if anybody's ever actually traded out there, has traded the Russell 2000 index futures, not index, but indices, that RUT, oh my gosh, the settlement is insane. And it literally just goes crazy. You don't even know where the number comes from. Okay? And literally, the market can close 1 point, and settlement, it's 20 points away. I've seen it happen. I've seen trades where somebody who taught me this trade a long time ago on the Russell 2000 talked about how he was in, and he was perfectly profitable, and he woke up the next day, and he is at maximum loss, and there's nothing he can do about it. And so I learned, take your profit. Don't worry about that last 10 or 20% of max profit. Just get out. And don't let a winner turn into, a loser. And, that's basically that's how, you need to do premium collection when possible. So, this thing it's moving and in the right direction. So, we got about 30 seconds left. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. Let's see here. So, we got it. And trade was profitable. And let me bring up, I grabbed a screenshot of like the final seconds, okay? Happening right there during that commercial break. And so you can see right here, we got our 2 trades in, had my take profits on, got out at 13.95, didn't get filled on 13.98. It went all the way to, didn't get filled on 13.98 for take profit, which means I got maximum profit on that trade. And what they do on this, let me zoom out a little bit so you can see it better, is they take the last 25 trades, okay, right before expiration, and they remove the top 5 and the bottom 5 trades, and they average the middle 15, okay? So as you can see, we weren't in any danger of the 13.95. The danger we had was the 13.98, and it basically, I mean, you can just tell right here, I mean, I don't need to grab every one of them because there's a lot of trades going off right then, but I got a good chunk of them. I mean, what are they, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yeah, so I got about 18 of them on there. And so you can definitely tell we basically expired at or below 13.98 because that was the one that we sold because we said it was going to be at or below 13.98. And so if the contract is gold August, will be greater than 13.98 at 1:30 p.m. And we sell, we're saying false. We're saying it'll be at or below. And but that's pretty cool trade right there. and it shows you a way to sort of convert. Like I said, earlier I had a trade for gold going short, and expecting it to sort of do a little bounce back, and it didn't. It went to this range bound strategy on this binary, and so with that trade, I'm sitting there, and I'm like, should I just get out? Should I just take my hit? Should I just get out? I don't think it's going to go. I'm looking at all my analysis. I'm like, I'm just going to watch time eat this thing up. I'm giving up money. And right as I'm about to come on the show, I'm like, I bet I can butterfly this and take the hit of about $25 on the gold trade and bring in $50 to make back the 25 and make a little profit, cover my fees, and just in that single trade out net profitable. And I'm looking at it and I'm like, well, 1398, that looks like a pretty solid support line. And 1400 has been really solid lately. I don't know if you've been playing that at all, but that's been a great area to play. And so if we go over here and I back up and look at 1400 has just been very respected lately. So I hit it and then fall back down, hit it and fall back down. And so if I go here like 30 minutes, you can just see, looking over days, this 1400 level. And we had this one day where, it just really shot up last week, early overnight, but then it fell back down. And then we had, another, overnight we've been getting these bumps. And we've had like one session where it's really been able to stay above it. And, past the 130. Pit close there. And so, it's really been respecting that level, and I'm like, okay, that could be good. And so I'm just looking at just basic support resistance on this, and that was one of the main things I looked at. Now, the other things, of course, that you can look at to help you at this, whenever you're trying to decide maybe support resistance, and we'll probably do some support resistance trainings. I might try to do one on Thursday. I'm going to be out tomorrow, by the way. My nephew was reading one of my books on trading, and he has dyslexia. And so I was like, basically his biggest thing is his parents are like, he just doesn't like to read, and I'm like, well, I can understand that because I hated to read too when I was, 12, 13 years old. But he's fascinated by what I do. And, he wants to be just like me, it's really cool. And so I'm like, well, if you really want me to spend time with you and teach you this, I need you to read some of these books, and I need to make sure that you got this stuff down before we sit down and spend some time. Now, then I'll get you a demo account, and if you do your stuff right, then we'll set you up and we'll get you, a minor account and all that stuff, and, we can go from there. And so piece by piece, and I'd like, if you do well in your grades, and I'll put some money in the account, and then you can keep half, and the other half will go into your college account. And so he's really into it, and he's actually he's doing very well. He tested in one of the top percentiles on reading, and just needed some motivation to really, make his mind focus on what it is. And his teacher noticed him getting into this and reading all this stuff, and so she's like, hey, she starts talking to him, and he's like, well, this is what my uncle does. And so she called me up. She's like, hey, can you come out to the school? We're at the the end of the school year, and just talk to some of the kids about just investing and trading, and what does it mean to own a piece of the pie in a stock, and what does it mean to exchange currencies, just little things like that. And so I'm like, yeah, sure. So, but I'm very, very excited. And, of course, my nephew's really excited. So I'm going to be out there for most of the day tomorrow. Because after I said yes, and they're like, well, could you talk to these other classes also? But so I'll be out for that, and just got that final word not too long ago. But Thursday we can come back, we can go, and we can look at different ways to put just different pieces of the strategies together. But hopefully this will help you out right here, and maybe I'll work on, like I said, doing a little bit of a support resistance training with you, and because it's something you can add in. Now, I honestly spend almost all my time focusing on just deviation levels, but it is prudent, I believe, to go in and look at support and resistance areas to see if there's anything that might stand out to you. Now, looking at this, you may notice, if we're looking at gold right here for today, we basically had a support resistance level already sort of predefined for us. We had 1394, is a little bit lower, and we had 1399.4, so a little bit higher. Would have been, sort of like if we're looking for a range, that would be one of the ranges we'd be looking for gold to stay in between. Like right here, because this is one deviation level, right here is another deviation level. And so you can see, that really actually better defines the range than 1398 and 1394. So, 1395, So that's just using the deviation levels that I include right here every day. We update those at 8:15. And, hopefully that was a new lesson for you, where you can not only learn how to use butterflies, but could potentially even use them if you're going into a trade to, hedge, to protect, to, get your money back on a losing trade. And that's why I was literally sitting here trying to figure out, I'm like, what am I going to do about this trade? Because I don't think this thing's going to win. And I don't just want to close it. I want to have a plan. Like, if I'm closing it, that means because here's why. It's not just I don't want to lose, and it's not just about money. It's if I'm going to close this trade, that means I expect it to not do something. Okay? And like the trade I had was the sell 1395 binary. And so I had this sell on down here. Well, if I have a sell, 1395 at 1:30 p.m., and I don't expect it to close below 1395 anymore, well, that tells me two things. One, I probably should get out of the trade, right? Because it's probably going to lose. At least that's my expectation is this trade will not profit. It will lose like $57. If I get out of it now, and then that's per contract, so you could be doing 10 or 100 or whatever. So I can get out now and lose like 20 or 30 bucks, or I can wait and see if I'm right on my analysis and lose 57 potentially. So I'm like, well, I want to get out now. But if I'm going to get out now, then what I need to do is go, well, why am I getting out? Sort of hard to explain, but why am I getting out? Because I expect that gold will close above 1395. So if I'm so confident that I'm going to take a loss and give up on a trade that I've been waiting 3 hours to, get done, well, then that confidence should lead me to another confident decision. So think about this. If I sell the thing for, let's just make the numbers easy. If I sold it for 50, because I thought it was going to go to zero, it's going to go up in 1395, and it's not doing it, and I no longer think it's going to go down. Okay? Right? If I held it all the way to expiration, I'd be risking 50 to make 50. Well, I could buy it back. I could buy the binary back for 75 bucks. Okay, now I've taken a $25 hit because I sold lower than I bought. If I sell for 75, buy for, if I sell for 50 and buy for 75, that's a $25 loss. But then there's something else I could do and not actually increase my original risk and potentially eliminate my loss just by itself, okay, is I could flip my position and just buy two of them. So if I sold one for 50 and it's at 75, I can put it in order to buy two. Well, the first one will close out. The second one will open up a position for $75. Now remember, this is a binary price. It's not the gold price. So the binary price to buy it at $13.85 was 75 bucks, which means my risk is 75. I can make 25. And so now I can make $25 on the trade. But what did I just lose? $25 on the original one that I closed out. So if I bought one for 50 and closed it for 75, I lost 25 bucks. If I buy one for 75 and it expires in the money, I make 25 bucks. Now I'm break even. And then you go, wait a minute. Well, didn't you just... Okay, so you took a $25 hit, but didn't you just add on a $75 exposure? Yes and no. Yes, if I just hold the thing all the way to expiration if it's going against me. Okay? No, if I will close it out if it gets down to $13.95. Because if it gets down to $13.95, I can get out of the binary for 50 bucks. Because there's a 50-50 chance the price is going to remain at the price it's at from now until expiration. Therefore, the price will be at $50. You can look at the binary price not as an exact science, but as a decent estimation of the probability of that trade being in the money. It's sort of like delta on options if you're an option trader. Okay? The delta is sort of like the probability of a option being in the money. Well, the price of a binary is sort of like its delta. So it's almost as if, and that might be one way for you to think of it if you're familiar with trading options, is imagine trading delta. Okay? And that's sort of what you're doing in the process. So increase delta, decrease delta. And that delta will grow as your gamma grows, as you get closer to, the money, as you get closer to expiration. But, I know there's all different levels of traders out there. Some of you don't have a clue what I'm talking about when I say the word delta and gamma and theta and vega and all that. But, But by putting all these pieces together, I mean, you can really make some cool strategies. And you can tie this entire thing in. And, I mean, you could do this. Let's say you like to trade the Dow. And I don't care if you like to trade ETFs or whatever, okay? I know we got some people over the den over there talking about the Dow right now. Let's say you'd like to trade the S&P 500. You can go in and you can place these trades. I do them. I've done them on here. You can go in and place these directional-based trades or these butterfly trades around the clock. So they got them constantly going on. And so if I go over here and we look at, like the S&P right now, I mean, it's short. I wouldn't really want to take a neutral trade at the moment. But 1626. And so I could go over here to, say, the binary scanner. And I could choose, let's say, the S&P 500. Okay? So US 500, the underlying, the CME E-mini S&P 500 June 2013 futures. So, it'd be /ESM3 or whatever over in Thinkorswim, or ES06-13 in NinjaTrader. And I can look at, I'll extend this out to the end of the day. And it's like, okay, so I got a couple potential expirations here that I can take advantage of. That could be premium collection trades. So, like this one, you could do here's a butterfly. Now, this is the end of the day, so you'd have 2.5 hours left if you wanted to actually do this trade. And depends on what looking at your Fibonacci analysis or, whatever analysis you got. There's a couple ways to do these trades. And one of them is, here's a 1621 to 1630. It's a $50 risk to $50 reward trade that you could do. Okay? So basically bringing in about $45, $50 profit on the trade. Now, you could even go for less money. Now, this is sort of like, how I did. I remember whenever I was... one of my mentors that taught me how to do the iron, people call them iron condors, but unless they're equalized strikes, they're not iron condors, but the iron albatross. And he went for 50 cents. So he'd go in and he'd do $10 wide strikes like a month before expiration on the Russell, and he'd go for 50 cents on each side. And I wanted to be greedy, but I wanted at least I was intelligent enough to test it. And I went in and I started testing and go, what if I would have went for 55 cents, 60 cents, 70 cents, 80 cents? And I realized the more money I went for, the less money I made because the more losses I had. Okay? And I was like, well, that's okay. Well, I guess 50 cents is good. I was like, well, what would happen? Just curious, what would happen if I went for less money? And I went down to like 45, 40, 35, 20, 25, all the way down. And I actually found that I made the most money going for 30 cents. I would have made less money if I went for 25. I would have made less money if I would have went for 40. So basically I had like this range of 30 to 40 cents. But if I went for like 45 or 50 cents, or if I went for 25 cents, I either just made less because it was further out, or I made less because I had more losses. And the 30 cents actually put it at a great point. And so that's that's something you can take over into this. You don't always have to do the 1-to-1. All right. Again, you don't always have to do the 1-to-1 butterfly. And I think that's a mistake that people may make. They want that $50 risk, $50 reward. And I'll talk about what you can do instead of that, and what you might want to consider as you're looking at these trades when we get back from this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, we got all these different trades we've been able to take advantage of. And, one of the things I was talking about is how you can put the binaries together to be able to hedge off your positions. And you don't have to, that's one thing you can do. Now, on this trade, if you weren't doing that, then you just made $50 doing following the trade, which is pretty cool. And then, if you didn't, then you made, maybe between, 10 and $25, if you were hedging off the other trade, if you followed the gold trade I did earlier. Now, I'm talking about the one I did this morning. Now, the other trade that you could do with this is I talked about how I used to go for less and I'd actually make more because I'd win more often. And you could do the same thing. You could go for buy at 85, sell at 15, make 30. Yes, you're risking $70, but it's wider. You're going to win more often, okay? Now, the key here in doing this is, remember, you don't have to risk 70. Now, at expiration, yeah, you could get hammered, okay? But you ought to be able to close the thing, ideally, before expiration. If it gets to your strike, what will that binary be worth? $50. Which means if I bought it for 85 and it's at 50, I've lost $35. If it gets that far down, you're at max profit on the other one, okay? So you're basically down $25. So you could actually do a $30 butterfly as long as you're willing to babysit it a little bit, okay? And set an alert as it gets close, so you get over there. I mean, you got to be willing to take the hit. If you take it, down $20, $25 risk on a $30 profit trade. You'd actually have a higher return on a $30 butterfly than you would on a $50 butterfly. And so, which is pretty sweet. As far as the end result, you could actually make a little bit more money if the trade goes against you. So, as far as expected risk versus that. Now, the advantage of a 1-to-1 butterfly is you can just leave the thing alone, and as long as you win at least more than half, then you're going to make money. Because if you can get 60% of them, you're going to make money. If you get 70 or 80%, obviously you're cooking. So, and Tom's got me saying it now. But we go on over here. Let's check this out, and let's look at anything else we just might have. I'm probably not going to be able to follow these through with you. I just want to see if there's anything that exists at this moment real quick. We got that one trade on, so that might just be our trade of the day. But let's go down here to 70 to 90. Let's shrink our clock on down to the next 15 minutes. Let's look at what we got coming up on currency. Well, there's an easy $10, 30.71. That's about 4 or 5 ticks away from live market, $15 now. Okay, so that's a trade that you can throw on right there. Butterfly, the binaries are going to shut down like any second now. But that is, that's 4 ticks away. That's, actually, it's about, 3-4 ticks. So it's close. But it's only like 2 minutes for it to get there. Now it's at 23.50. Now it's at 30.68, 30.71, 30.69. So, really close. $24. So that's one trade example you could put on. And let's see if there's anything else on any of the other currency pairs we just throw on as examples. And, throw these in your demo account. Okay, just learn how to do them. Have a little success. Just because you can win in demo doesn't mean you can win in live at all. But if you can't win in demo, probably not going to win in live. So there's one over on the US yen. That one's way too close. And so we're not going to do that one. That's like half a tick away. Pound yen. Let's see how close that one is. Pound yen's currently sitting at 152.99, 98. That gives us a couple pips. That's pretty tight. So it looks like the first one we threw on right there. Yep, binaries just shut down. But looks like the first one we threw on there, that was going to be profitable on the euro dollar. And so another quick $20 in a few minutes. Not too bad. But anyways, check it out. Have fun. Go to tfn.com. Sign up for Nadex. Sign up for the diagnostic scanners. And start learning how to do this today. I'll talk to y'all on Thursday. Bye.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.